This stock has been called the super app of Southeast Asia, and despite being up over 50% year to date, many seem to think that it can go even higher as they plan to continue their domination of the region. And that is the narrative that is surrounding Grab these days. You see, Grab is free cash flow positive and recently inflected into net income profitability, even as they continue to scale the different verticals of their business. They recently expanded their financial services segment of the business by starting a digital bank in Singapore and Malaysia. Now, on top of that, they actually also acquired a stake in a fast-growing digital bank in Indonesia that is now accessible through their app. Once touted as the Uber of Southeast Asia, I think they have already outgrown that label, and they are way more than that to many of the consumers today. And despite all of these catalysts, they have recently seen some analyst downgrades. Now, while I largely do not agree with the reasons behind some of these analyst downgrades, I think as investors, it's important for us to understand the assumptions behind some of the growth prospects that are in front of the company today. And so being in Singapore, I'm going to show you what the app looks like so you can get to understand its ecosystem a little bit better, and you can decide for yourself whether or not there really is potential in its growth trajectory going forward. But as always, potential is a dangerous word, so let's dive in. And so I want to begin by talking about their mobility segment, which is their oldest business. Now, if you tap into the app, this is actually what you see, right? You can see their main business segments over here: food, transport, GrabMart. Now, if you tap into this all button, you can actually see, other services that they provide, things like travel insurance, hotels, and health. Now, all these other smaller business, they're actually basically doing it through partnerships, so I'm not going to be focusing on them. Now, this is how the transport segment actually looks like. You can see during certain times of the day, or in this case at night, the fees are higher due to high demand or the lack of drivers, as you can see over here. So what I'm actually doing is to plot a trip between Orchard Road, which is Singapore's main shopping district, as well as Ang Mo Kio, one of the suburbs in Singapore. And so for me as a Singaporean, you can see this $35 price here is actually very, very expensive, because if you take a look at Google Maps, right, from Orchard Ion all the way to Ang Mo Kio, that's actually only a 10-kilometer journey, which costs $35. And so you have to understand the context within which I actually making this statement that this $35 price is expensive. Because if you take a look at this website over here, this website is our MRT website. MRT is basically Singapore's subway system. Now, if you take a look, a train ride from Orchard to Ang Mo Kio basically costs you $1.63, and the whole trip takes around 17 minutes. Now, if you notice earlier on Google Maps, it shows you that the drive between Orchard and Ang Mo Kio takes 15 minutes, so it's actually only 2 minutes slower by train. Now, of course, there are a variety of other reasons why people might choose to take Grab over a train, such as convenience and comfort, and of course, not everybody stays near a subway station, so definitely one of the benefits of taking Grab is that, the car actually sends you all the way to your apartment, right? But I guess that is why, when people look at Grab, they actually say that the target market here is actually the middle class, because, the middle class do have excess cash to spend on such, in a sense, small luxuries. So, however, saying that, we have to understand that Singapore is small. We are literally a dot on the world map. Right, and so that's why, traveling between different locations in Singapore can be quite convenient. However, just go to our neighbours Malaysia and try to take the public transport over there, and you can see why Grab will work in some of these other Southeast Asian countries, especially when the public transport is not as regular, and perhaps, it's actually harder to get around because the distance between all the locations are further away. So additionally, I do think that the familiarity of Grab makes it, very tourist friendly for people who travel to different regions or different countries within the region. And so if that's the case, if Singapore's public transport system is really so cheap and efficient, how is it that Grab has still managed to gain such a large market share? Now, I think because you have to understand that, despite, yes, it's convenient to actually take the train around within Singapore, I think for many families who have young children or elderly and things like that, or people who have to travel quite a lot for work, right, it still makes sense to own a car. And in Singapore, you don't just buy the car, you need to buy a license to buy the car, and this license is called the COE. And if you take a look over here, the license to own the car can actually cost more than the car itself. So there are many people, because of this license, is unable to afford the car, and yet at the same time, they do need the convenience of traveling to multiple locations because of work or because of certain commitments, and they will then still choose to use companies like Grab. And so in Singapore, Grab does have competition from other companies like Tada and Gojek, as well as local companies, and these are how some of the other apps look like. It's still very basic compared to Grab. Now, actually, some people use this app to check for cheaper rates. Now, actually, what I just did, right, is to actually take this screenshot over here during lunch today. you can actually see that literally at the same time from the same destination, right, the price is different. I think on Tada, from Ion to Ang Mo Kio cost you around $14-15. And you can see this screenshot over here from Grab at around the same time, it cost you $22. So like I said, if this was only a price war, right, this might not be a good thing for Grab. But this is why their subscription matters. Because if you already have a subscription on Grab, they may have coupons and vouchers. You may want to earn rewards and things like that, which is why it is less likely that people will hop on to another app, unless the price difference is really that significant. Now we come to Grab's second business segment, which is their Grab delivery. I think whether or not we're talking about Grab Food or Grab Mart, I can definitely see this continuing to become a bigger and bigger part of our culture today, not just in Southeast Asia, but around the world as well. I think it's the convenience of having food that you want at your doorstep. And at the same time, I think, people are just tired from work. Right now, both husband and wife have to go to work and things like that. And then so when you come back home, you're probably too tired to cook. And so, Grab Food just becomes an attractive alternative. So I think how often you use this feature actually also is dependent on where you live. Of course, if I'm craving for a certain food or I just feel lazy, of course I will use Grab to order. But in all honesty, the delivery fee itself can sometimes actually buy you an entire meal. And here is proof, right? If you buy a cup of coffee in Singapore, it costs you around $2.10. Rice with 3 dishes, you can get it for around $5, right? So all in all, less than $8, and the delivery fee costs around $6, which is, 3/4 of the price. So for someone like me, I'm fortunate enough to have 3 different coffee shops within walkable distance for where I live. I also have 2 supermarkets nearby. So I'm not as active a user on Grab as some of my friends, not because their app isn't very good. It's just because, I'm just trying not to be lazy so that I can save some money. Now, again, like I said, this is the luxury of living in a small country like Singapore, where, there are many things that are within walkable distances from me. But even within the newer neighborhoods in Singapore, we actually do see a lot of these younger couples in the newer neighborhoods, right? They actually turn to Grab because they don't have as many options within the area. On top of all of this, I think, like I said earlier on, Grab basically makes it very easy for anyone to travel within the Southeast Asia region because of the familiarity. And so when I was in Bali for holiday, it was very convenient to use Grab to order food to the villa that I was at. And so finally, let's talk about the financial services component of their business. Now, I think this aspect of their business has many moving parts. They have Grab Pay, like I was mentioning earlier, which is their point of sale service, their insurance business, and things like that. But I think what I really want to focus on is their venture into the digital bank space via GXS in Singapore and GX Bank in Malaysia. Now, it's important to note, right, that this is actually a separate entity altogether. Actually, on its website, the bank actually says that it is backed by a consortium. Basically, it's just a joint venture between Grab and another partner, Singtel, and where Grab actually owns a 60% stake in GXS and Singtel a 40% stake. And so on top of all of that, GXS basically plans to reach around $3 billion of deposits and a $2 billion loan book by 2027. Now, like I've mentioned earlier, I'm not a big fan of their partner in this business, Singtel, but for the sake of this video, I've downloaded the app and actually biases aside, it looks good. It's very simple. You can see over here, and depending on where you actually park your money in the bank account, you can get anywhere between 2.4 to 3.2% interest per annum. And like I said, this interest is actually credited daily to your account. And then there's basically no, minimum required deposit. So this is actually fairly standard for a digital bank in Singapore. Now, in the recent earnings call, they actually said that, this is actually on top of their current loan business that they're already doing through Grab Finance. And the uptake of their most recent loan product, which is I think called Flexi Loan, is very successful because they have a 65 net promoter score, and that is pretty uncommon in banking. So when they're talking about bringing in deposits, right, they actually also tell us that, currently they are bringing in deposits at a lower cost than they had initially planned. So it does sound good to me over here. But actually the real competition to me is not the other fintechs within Singapore, but the legacy banks themselves. Now, the only thing is that the legacy banks in Singapore actually are not moving that slowly, at least on the banking front. I know on the investing side, they're actually still quite bad. But I think on the banking front, in terms of the services and all that they provide, they're actually not too bad. Now, I have this story that I actually heard from my friend who spent a year working in the US. So I do want to ask at this point in time, like how common is this, and whether or not my friend's situation is unique and whether or not this is normal. So basically, my friend was complaining about the long queues he had to go through when he was opening an account with the Bank of America, and how when he was transferring money, sometimes it can take a couple of hours or even up to 3 days. He was actually telling me something like a wire transfer takes sometime between 24 hours in some cases up to 3 days. And I think for him this is such a foreign concept because most banks in Singapore, even the bigger banks, don't actually require you to go down in person to open an account. Based off my memory, or at least from the banks that I'm using, and I'm using, the bigger banks in Singapore like DBS and things like that, you don't actually have to go down to open an account. Money transfers actually happen instantly because I believe in US, you have to use Zelle, but Singapore's version of Zelle is basically embedded within the banking system itself. It is tied to our IC number or social security number for the US or our mobile number, and so transfers are immediate, and it's between whatever is your primary bank. You don't have to be within the same bank, right? So on top of this, you can actually apply for certain loans online. You can actually also get some form of insurance online as well. Not the full coverage, but at least some of it. And so the main difference I do see is that many of the big banks in Singapore do have many branches, which does increase their cost, but I guess that is a necessary evil in a sense to serve the elderly or those who are less tech savvy. And I do have to say it's because of this discrepancy in cost that's where the digital banks can really compete with the legacy banks. Now I have to say I really don't like going down to banks because the queue there is crazy. You have to wait in line sometimes up to 2 hours before you get served and things like that. So I really don't like going down to banks. So when one of the banks that I was using previously, I had 2 accounts there, and I wanted to close one of the accounts, and they didn't allow me to do so online and asked me to actually come down to close the accounts. I was actually so annoyed, and so on the day itself I transferred out all my assets into another bank account, went down to the bank and closed both my accounts at the same time. And that is the ease of the financial landscape in Singapore. So I do believe that the competition here is fierce, and it'll be interesting to see Grab's strategy in this space, which they actually talked about in some of the news reports. And so if you take a look at some of the reports in the Straits Times, which is Singapore's local news outlet, you can actually see that GXS is not planning to compete for the same customer as the big banks is trying to get. They're trying to serve the underbanked or unbanked people even within Singapore itself, and that is largely made up of the gig economy workers, entrepreneurs and things like that. And they basically target giving consumers and small businesses access to credit. And so what that would actually mean for their overall credit quality is something that we have to pay attention to. But if you consider the competition within consumer banking in Singapore, I guess it really does make sense that they start from this segment of the economy that the larger banks are not focusing on and start to grow from there. Now, how this will scale across other countries in Southeast Asia remains to be seen. I think everything is speculation for now, because right now, on the surface, it seems like it is not a plan that they have to open a digital bank in every single country, as evident by them acquiring a stake in the Indonesian digital bank and just basically allowing access to their bank through their platform. So we have to see how this plays out within the different countries in Southeast Asia. But I think, is this financial services aspect of their business more than the other business segments that is dependent on a strong Southeast Asian economy. And this is where we actually want to see, growth in GDP per capita start to increase across all the countries that they are in. Because while segments like ride-hailing and food delivery, I think some people might consider this a small luxury, everybody at the end of the day does need a bank. Now, finally, I do want to touch on something that I believe not many people have actually spoken about, which is actually Grab piloted a financial services product before. It was something like a robo-advisor, and it was called Grab Invest. Now, because of a variety of reasons, that they actually didn't work out, and they eventually had to shut down this initiative in September of 2023. So this digital bank space is not their first rodeo in the financial services arena. They have actually something that didn't work before, and that basically informs the decision on why they have decided to run the bank the way they are doing today. Now, I personally didn't make use of Grab Invest, but when I was reading some of the local papers to have an understanding on why the products didn't take off, basically some of the analysts actually pointed out basically an overestimation or over optimistic projection on Grab's end, where they actually felt that people on their platform would be enticed to invest through them as well. However, I think there's a lack of synergy between their financial services offering and the people that are basically using the platform to order food and to get a ride home, right? So these are not people who are perhaps in a mindset to invest and things things like that. And so because of that, it does make sense that if they want to, have another venture into the financial services industry, then it comes across as a separate entity. Now, on top of that, Grab actually also suffered from a lack of brand recognition. I think some of the people interviewed by the news outlets say that, there are more established platforms that they could turn to for their investment needs. And I think Singaporeans basically see Grab really as a ride-hailing and food delivery service. So for them to come across as, using our platform to invest as well is might be a little bit of a stretch to some Singaporeans. And so to have this digital bank as a separate entity might not be a bad thing as well. Now, one of the issues that the newspaper actually pointed out is actually saying that Singapore is a small market and our general population have a low propensity for investment. And so because of that, it's not easy to launch financial services products in the first place. And that is something I have to really, really agree with. And so the two products that Grab actually offered were called Auto Invest and Earn Plus. Now, Auto Invest, basically you can set an amount of money that Grab automatically invests for you on your behalf each time you transact on Grab, which means if you order a Grab ride, then they'll put $2 into your account. If you order food from Grab, they'll put another $2 into your account and things like that. And then you get an annual return of up to 1.8%, which sounds pretty bad to me. I don't know why would anybody use this. And I mean, I guess it's quite clear why it didn't take off. And on Earn Plus, you can actually use your money in GrabPay wallets and invest in certain institutional funds and things like that. Again, they say you can earn interest of up to 2.5%, which is again quite bad. So, I mean, I guess I can kind of see why it didn't work out. And so at this point, I mean, to me, this is really a pet peeve because I have to say, despite Singapore being a fairly well-to-do nation, we really have very, very poor financial literacy among the population. And I think what the news report said is true. They actually take the words right out of my mouth. People don't understand what is a good investment. So in the last couple of years, people actually think that, having a 3 to 4% yield is actually a good investment. And I'm not even talking about millionaires trying to be conservative to protect their capital. I'm talking about people in their 30s and 40s trying to prepare for retirement. So they have this mindset that, I'm going to take $100,000, put it into a bond that gives me not even compound interest, simple interest for the next 10 years. And then that will basically set me up for retirement and things like that. And so I think, in Singapore, there's this whole mindset where people actually see things like fixed deposits and high-yield savings account as an investment rather than, use it for what it really is supposed to be used for, a cash park for money that you need in the short term. Like one of the things that really infuriated me, right, it was that seeing the number of people talk about, keeping a minimum sum of 100,000 in this particular bank account that, if you have a minimum sum of 100,000, you get a higher APY at the end of the year and things like that. And I think people just don't understand how investment works and things like that. And I think Singapore is wealthy because on a national level, we position ourselves as the financial hub of Southeast Asia. We are business friendly to foreign investments and things like that. But on a more localized level, I think there's still this mindset that investing is gambling and you can basically save your way to retirement. So I think the state of financial literacy in Singapore is a concern to me, but I think thankfully, the younger generations, right, they're seeing that, the way that they have been taught over the years doesn't seem to be working because of the way that prices are rising nowadays. And I think thankfully some of the people around my age are starting to see that as well. Now, this is not to say that, every financial product Grab puts out will be bad. But as investors, I do think that we need to go into this investment with both our eyes open. This is not Grab's attempt at penetrating a new market. This is actually their second attempt at financial services, and the company that they have chosen to partner with, Singtel, like you see over here, is one of the biggest telco. In fact, it's the biggest telco in Singapore, and let's just say they are not the most well-liked company in Singapore. But having the digital bank as a separate entity does address a lot of the issues that they had initially when they first released their financial product, Grab Invest, and it detaches them from the whole Grab ecosystem. And so I think with that detachment, I think it's easier for them to go after a different demographic of customers. And with the amount of data that they have on their customers, on their merchants and things like that, it basically gives them, enough data points to make decisions on how to actually curate all these financial products to suit the demographics of customers that they are going after, and rather than to try and cross-sell the existing customers on their platform. I think because I don't use Grab as often as some of my friends, I might have passed over this as an investment in the past. But as I look more deeply into this company, I've come to realize I really do resonate with their vision to drive Southeast Asia forward by creating economic empowerment for everyone. And I think to me that is important because, despite Singapore being a wealthy nation, I think in my line of work, I've come across people from all walks of life. And honestly, sometimes life just happens. And government aid can only do so much for people. So their vision of economic empowerment is one that I'm fully in support of. And I can see how they have been adding value to the community opportunity, not just on the merchants and small businesses side, but on users of their platform as well. Right, so I do like this investment, and if I were to do a full-blown valuation like what I've done for so far, I do need to understand the numbers a little bit better and some of these assumptions. I think I've mentioned before that, going into some arbitrary ratio is not the best way to do valuation, but I think if you take a look here, just on a very high level compared to companies like Uber and C Limited, on a price to sale and price to free cash flow basis, they do seem fairly rich right now after the recent run-up. So currently, I don't have a position in this company. I do hope to add into this position as it falls below $5. I think for now, I'm adequately exposed to the market, so I'm not in a hurry to add. After buying over the last couple of years, I feel like we are slightly toppy in some areas of the market. So if this run continues, definitely I'll be happy about it because I'm more than adequately allocated into the markets. But if we do experience some sort of pullbacks, then this is one of those companies that I'll be definitely keeping my eye on. And perhaps I'll look to do a more detailed valuation about this company into the future. But if you're talking about companies that are still undervalued in this current market, I talk about one such company in this video over here, and I'll see you in the next one.